Good morning, good evening, wherever you are in the world. Let me put my Zoom thing in the right place so I can look right down at the camera at you. I hope everybody's doing well this morning. We're going to cover a little bit about what went on last week and where it might lead us to what we might think about coming up this week. So I'm going to start with the data. I've got really this is about trying to get some trade ideas. Really, what actually might be something that we can actually look to trade. So let me share this screen with you guys. Here we go. We're here and have a look at the economic calendar from last week and really what it was telling us about the market. So looking through, the pound actually started the week relatively negatively in its outlook, but it improved as time went on. But I'm going to start and go through one by one rather than covering them all at the same time because it gets a little bit confusing, I think, doing it that way. It was a pretty big week actually last week. So let's start with the Aussie. And really, what we saw, quarterly business confidence improved a little bit. Manufacturing PMIs actually there was a decline there, but there was an increase in services PMI. Now, the data really coming into last week was pretty positive actually for the Aussie. So the Aussie sort of continues to be relatively buoyant, covering sort of like data from the previous week and coming into what we saw last week as well. It was okay. The manufacturing was a little bit negative, but generally speaking, because services was decent and quarterly confidence was good, or the business confidence, that kind of leaves the Aussie more on the buy side than the sell side. So the Aussie is an option if you're sort of looking for a long. The pound was bearish coming into the week, but it started to improve. Now, one thing we did see was the CPI data, and actually it was a little bit bearish because it's a very high number, this 3.8. Regardless of whether it declines, falls, or stays flat, it's already a high number. But expectation was for an increase in CPI data, and actually it came down a little bit. So there was a little bit bearish sort of like signal from that. And also when we look at the PPI as well, the PPI input was negative as well. So that was pretty good for the bears for the pound. We had some consumer confidence come out along with the retail sales, which actually started to boost things a little bit. Manufacturing, an increase, but still under 50, notably. The services PMI was a slight beat and at 51, not a huge expansion, so around about neutral. So pound might well be worth being a little bit cautious about, I would suggest, in the coming week. Really, what we're looking for is something to really stand out, and the pound doesn't really stand out as a tradable opportunity. The Canadian dollar is the next one we'll have a quick look at. And the Canadian dollar was a little bit bearish as it happens. The CPI data did come out slightly beating and actually beating on the year over year basis. But interestingly, so when we sort of like look at some of this CPI data, even though it beats, because of where it is, 2.4% isn't really awful, and that wouldn't encourage a central bank to raise interest rates at 2.4%. However, the money that is used in people's wallet is worth less because of the inflation. So that's actually a little bit negative for the Canadian dollar. And we also did see some housing starts from the Canadian dollar, which were maybe a little bit more bearish as well. So the core CPI was relatively neutral, but this CPI data does actually give it a little bit of a bearish slant. Let's have a look now at the euro. Now, the euro is maybe one of interest for the buy side. The Aussie definitely we could consider. The euro is another one that we could consider. It was already okay, the euro, but when we kind of have a look down at the services PMI, that was a decent beat. 52.6, sorry, from 51.2. Is a decent beat. That's a decent climb. Manufacturing also edged into expansion territory, being at 50. So there's no sort of like, but huge concerns about the euro after last week. So going into the week, I'd be okay, feeling fairly confident about the euro. So euro and Aussie really are the two that are currently kind of on the buying watch list. And then we need to find something for the bearish watch list. Definitely the CAD could be considered, but I do actually really like this yen. Trade balance from Japan, slight increase, but it was forecast to come in at 22 billion. So actually, it was forecast to come in positive, and it was still negative. And that little climb is also, relatively bearish. So trade balance is something that could give us a bit of a signal that we should possibly be looking at selling the yen. CPI data, national CPI data, came in at 2.9 from 2.7. And it's another one of those situations that if you don't get a reaction from the central bank, i.e., they don't raise interest rates, then the money's getting eaten away. So that actually provides a bit of a bearish slant to it. It's because it's at 2.9, it's edging closer to where the Bank of Japan, or in fact other central banks, would be more likely to maybe hint at raising, but the BOJ tend to be sort of like relatively dovish. So it's a bit of a neutral sign that I wouldn't take too much heed in it, one way or the other. And manufacturing PMI really was the other kicker. Not only was it a loss of expectation, but it was a decline. So 48.3 is a bearish signal for the yen. And therefore that is on the selling watch list. So looking at the euro yen, we'll look at the charts in a moment. Looking at the Aussie yen maybe as well, we'll look at the charts for that. The Kiwi is probably a little bit more balanced in many respects. CPI came out and it was showing a 3%, bang in line with forecast, but a 3% kicker. And that will probably leave the central bank maybe on the alert a little bit. But it's actually it's a bit bearish, that, because of again rising prices and a lack of financial kickback from the New Zealand dollar. Not a particularly good signal. Trade balance was a little bit more, I guess, neutral. A slight climb, but it's still pretty negative. So not that interested in the Kiwi, if I'm honest. I'm not really looking for the Kiwi either this week. And then we'll finally end up with the last two, which is the Swissy, which didn't have a lot of data actually from Switzerland, but the trade balance did come out, and it was a little bit bearish, a bearish signal, but missing forecast. But this sort of, this climb of where it is does actually sort of like tend to weigh on the Swissy rather than have a positive impact. And then finally the US dollar. So really, we're looking right now. Aussie and Euro are potentially the sort of like the buying currencies. Possibly the CAD, but definitely the yen is on the bearish side. And there's other things as well with the yen that we can look at. But when we look at the dollar, there wasn't really anything significant. There wasn't any sort of significant releases. Not a lot of significant releases until Friday. And Friday is pretty bullish. I mean, this is a concern. And if we kind of think about what happened last week, we had the Canadian government, sorry, the Canadian economy showing inflation. We showed the Japanese economy showing some inflation, the UK economy inflation, and the US economy showing inflation. And not really kind of a welcome sign. Below expectation, which is probably why the market didn't really kind of bubble to the upside. But 3%, I mean, that is not a welcome sign for the bulls thinking, or even the dollar bears thinking actually that the Fed are going to lower interest rates maybe greater than expected. If they lower, they might lower, but if they lower, it's not going to be by much. You wouldn't think, considering the other kind of metrics that are out there. But the US economy is doing okay. Inflation's 3%, which is uncomfortably high, and the Fed are sort of sitting at 4.25%. They may well bring it down to 4%, but coming down to 3.75. That might be a stretch, and that would suggest that they may know something that we don't. And we have to remember the government shutdown means that the labour market data is just not being reported, and therefore it means the COT data isn't being reported. So we've got a little bit of a curtain when it comes down to making assumptions on these currencies right now. But if we go on the face of the fundamental data alone, that would suggest the Fed probably shouldn't lower interest rates. They probably will, but they probably shouldn't. And because they probably shouldn't, but they probably will, then maybe a 4% target for that interest rate may be the number to look out for. Anything under 4%, I think the dollar is in a bit of trouble. But the numbers don't suggest that's going to happen. So let's have a look at the data for this week. So we'll bring back all the currencies and just have a look at all the majors anyway, and have a look at what is suggested for the week ahead. And we'll look at the seasonal data, and then we'll look at the charts to see if we can kind of get an idea of what might be setting up, what could be attractive. We've got 1, 2, 3, 4, 5, 6, 7. We're missing one, missing the euro. There it is. Number 8. So big week, big week, and it might be one of those weeks that you kind of you don't really kind of feel comfortable trading. But there's a couple of things I want to show you, which I think could be really interesting, and that is firstly the BOC interest rate decision. Now it's forecast to drop by 0.25%, which is you probably it's telegraphed. Everybody knows it's going to happen. The inflation data may stop that happening, but it probably will drop to 2.25%. Now, if it doesn't and they stay where it is, that's going to be pretty bullish for the CAD. But if it does drop to 2.25%, and we compare that, I mean, we'll hop over the others for right now, but we compare that to what's expected from the ECB, which is to stay at 2.15%, then that is going to be bullish for the euro CAD. Now, when we looked earlier at last week's data, it lent towards some bullish kind of moves for the euro and a little bit bearish for the CAD. So euro CAD long could be something we could go into, could be something we could look at. There is a seasonal long for the euro against the CAD coming in around about 2 weeks, so it may be a shade early. But this is something that I'll be looking at next week, euro CAD for potential setups long. And then, of course, we also have, where do we have it? Where's our when is our Fed next one coming out? It's going to be on the 29th, which is Thursday. So actually that's the same day. So a little bit later by those things. Yeah. Maybe they're not listed here, but they are listed up the top there. So this might be something to watch out for as well. Why there's a bit of disparity there. Listed up here to be kind of coming out on the 29th of October, which is next Thursday. But actually, when you kind of like scroll down, it's not on here, I don't think. Unless I've missed it. No, it doesn't look like it's on there. So we'll see what happens with the Fed next week. I probably will be avoiding that anyway. I'll probably be avoiding the dollar and looking for the euro. Now, the interesting signal from the seasonals, the yen very bearish, really, kind of coming into this week. If we look last week, it was very bullish last week because the monthly structure was quite bullish last week because last week specifically was so bullish on the yen, but it effectively dived straight back down again this week. So we can see the yen is a sell across the board down there, and everything else is a buy against the yen for this week. And it's the same for the month. When you sort of extrapolate out for the month, it's also pretty negative for the. Well, it's very negative for the yen, selling right across the board. So the yen does actually stack up really nicely for some selling opportunities. So if we look at the chart next. And here's the chart. And I was just having a look at this dollar yen. Actually, for the Telegram post, I was looking at this dollar yen, and we can see that the dollar yen has to get through this level. It's got to get through that monthly level until it breaks through. If it breaks through, then I'll be interested. It would have to break through. That's the monthly chart, so it's going to have to break through by the end of this month. If we look at that on the weekly, then that'd still be okay. If it broke through, sort of, coming through into the week, no problem. And on the daily, the same thing. It's got little ways to go. This double top is a big problem, and as I mentioned on the Telegram channel, this gap is a problem as well. So it's kind of, we'd need something pretty negative to be said, probably. The data isn't suggesting that we should be looking at short dollar yen, making it a difficult play. And that if we're waiting for somebody to say something, Donald Trump or one of the central bankers, most notably Jerome Powell, to come out and say something, or they come out and suggest something from the Bank of Japan, which also could happen if we consider that national CPI data. It's devaluing the yen by default because the interest rates are so low. So they might come out and suggest some sort of monetary policy next week, but that's going to happen pretty quickly. So the data, which is rolling and rolling and rolling, is not suggesting we can take a short move. If something comes out and gives us a little hint, then we might be able to short this, because the bears are very much probably primed to be looking at selling this thing off. Pretty strong looking bar though, going into last week. And if you look right across the board, that was the situation, with the yen against just about everything. Here's the Kiwi yen. Another one, another really strong looking bar, and another one that I wouldn't be sort of like adverse to trying to trade this one long. Maybe as a proxy, really, sort of for the Aussie. I wouldn't mind the Kiwi yen, but again, it's kind of right on top of resistance and not an area to want to trade. I'd probably move my trend line up to get clear of this level before I was going to trade it. If it broke and held there for one of the days next week, return for another day, then I'll be looking maybe for some buy signals. I mean, it'd have to be as no earlier than Wednesday, given the structure of the chart. And here's the Aussie yen, which fundamentals look good with this one. A decent looking weekly bar. And if we go to the daily, got some room to the upside, but not a lot of room. So maybe drifting back down again, maybe sort of like testing the this low test, this hammer, maybe testing this area could be a sort of potential buying opportunity. And it's closed the gap, so this one's not such a problem. But it just the charts against the yen are all a bit elevated. They're right on top of resistance. They're not particularly attractive. If you're looking at play, and this is a head and shoulders pattern. You can see this here. Um, Here's the left shoulder here. There's the head up there. There's the right shoulder kind of forming. It looks like it's got a little while to form, but that also suggests downside. That's what the chart pattern's kind of suggesting, which is not particularly useful. So not 100% sure about the yen really, or anything against the yen. It's not something which is all that tradable, given the current price. Things can certainly change, but given the current price, it's not particularly attractive. Okay, so I'm not sure if I can get rid of this. There we go. Sorry, couldn't get rid of my drawings there, so it's an easier way to do it. Um, the one of most interest now, the euro yen was one that was again, it was quite interesting for long positions, but this one's broken to the upside on the monthly. Again, a strong looking bar. It's got to break those highs. If you come back down to the daily, this again, double top, not very attractive area right now. So going into the week, this isn't attractive. As the week progresses, if it comes back down, then it might be something that is possibly tradable. But coming down maybe into this cluster here, the gap again is a bit of a problem down here, but given the fundamental picture and the seasonal picture, then the yen might be, the euro yen could be of interest. The one that might be better is the euro CAD. And the reason for that is that we looked at the fundamentals coming into next week are supportive of the euro and a little bit negative for the Canadian dollar. And we looked at the forecast for interest rates, and the forecast is for the BOC, the Bank of Canada, to lower their rate, while the ECB, the European Central Bank, to hold their interest rate. So that means there is a spread between the two of them, which is about to change. And it's if forecasts are correct, and we can't just assume they're going to be, but it does mean that given that the interest rate decision isn't until Wednesday, we might have Monday and Tuesday to possibly trade this and trade it long. Much less likely, given the course of the data, to break through a resistance zone. And because break through a support zone, much less likely. And because resistance is a little bit further away, while it will still remain, let me just see if this is a genuine range here. It looks like it probably is. There's the range that we're probably looking at. Now that point there, that resistance is a lot further away. So even though it's not likely to break through resistance, it's got some distance to travel before it gets there. Now we've seen already that this high matches these closes here and is a point of interest for the bears. So it would probably have to take that area out. But if there was enough room on an intraday chart, maybe the hourly, maybe and that looks all right. That looks all right. But given the structure of this kind of going into the week, there is probably an area just under here where the stop can be placed, and still getting to a decent 1.5 to 1 trade. So the Euro CAD is probably the most interesting when you look at everything. When you look at the fundamentals, the seasonals aren't great, but there is a very, very bullish seasonal period coming for the Euro CAD. That's not due to start until around about mid-November. But we're nearing it, so there might be sort of like some potential plays beforehand. And really, all I'm talking about is maybe taking advantage of early week run into that data. I wouldn't be if there was a trade on and I could take it and I could get the profit before it kind of had to get beyond this zone, and before that news came out, I'd take the profit. I wouldn't worry about sort of sticking around and hoping for that data to kind of come in my favor, even though there is a suggestion that it would do. I think that I'd be quite happy with just the speculation from traders to push price up, take advantage of it, and then if they're right, they're going to make a lot more money than me. But I quite like the easy play of it if this one does shape up. Now, if it dipped down a little bit, I'd remain interested. It would just sort of like actually make the price more attractive, because what I'd really like is to get stops under here. So if there was enough room to get a stop under that point and still get 1.5, 2 to 1 to the upside, that would be more attractive. So buying in and maybe looking for another trade if it does dip down, but looking for a run to the upside on the Euro CAD. So really, it's a week to be very careful. Because those interest rates announcements are coming out from the ECB, potentially from the Fed, and also from the BOC. then it's a week which is going to contain some volatility. You could choose to just stay away from the ones without the central bank announcements, or you could attempt to play an early week trade with something like the Euro CAD, and see if you can get a decent run to the upside. But that would be my take on the week. I hope you all have a great week too. Be very patient. That's the key really to the game, and make cool, calm decisions. And if you struggle to do that, probably something to do with the way that you're approaching the trading environment. So it won't necessarily be a human fault of how you're necessarily trading. It might be sort of like slightly a bit bigger than that, and just sort of like something about how you're approaching looking at the charts, and maybe look at try and place your trade, make a decision, step away from the charts and take the emotional. Have a great week, guys. I wish I could be with you, but I've got a very busy day ahead. But happy trading, and I'll see you all very soon.